So here we start with the next session, and the topic of this session is MUFG Discussion, Gateway to Southeast Asia, Key Consideration. So for this, ladies and gentlemen, we have our moderator. So please welcome Mr. Hero Chaudhary, Managing Partner, BEENEXT. Welcome back, sir. With this, I'd like to invite the speakers for this session. I apologize for the pronunciation. I'm trying my best here. So let's welcome Mr. Naoki Mizoguchi, Global Alliance Strategy Director, Danamon. And now let's welcome Mr. Sam Tanskul, Executive Vice President, Head Innovation and Investment Department, Managing Director, Krungsri, Finnovate. Now let's welcome Mr. D. Venkatesh, Founder and MD, Lentra. Now let's welcome Mr. Osamu, Managing Director, Deputy Head of Global Corporate and Investment Banking, Asia Pacific, MUFG. So I'll hand over to the moderator from now. So if time permits, we'll take a few questions as well. Thank you so much, sir.
All right. So thank you all for being here, and thank you to the panelists for attending this and sharing your insights. In the previous panel, if you noticed, we spent a lot of time in going through the introduction. So this time I'll just change the format slightly. We will start with introduction, but we will combine the introduction question with a little bit around overview of the market and clearly both India and Southeast Asia and how each one of you see a role of you or your organization. And I'm thinking maybe we start with Abe-san from MUFG.
Sure, thank you. So I'm based now in Singapore. I overlook the large corp transactions for all the APAC, which is from India to Oceania, Southeast Asia to China. So if you could bring up the one slide that shows our business, the large corp is at the top, and we have historically invested in our partner banks. From left, you see Thailand, Krungsri, Indonesia, Danamon. We own a majority of those two, one of the 10 largest banks there. In the Philippines, Security Bank, Vietnam, Bank, those are also 20% plus relationship there. If you go down to the middle, of course, they deal with middle mass banking relationship. We do have stakes in Grab. And at the bottom, you see Mars Growth Capital, which whereby we partners with Israeli AI tech company. It is a startup growth stage lending, fintech lending portfolio. And we started from 80 million of capital allocation, quickly went to 200. Now it's counting to a cumulative 1 billion now. And we're also looking into equity investment, not only just in outside Japan, but also veering into Japan as well. And at the right, of course, we have in India, DMI Finance. That's another fintech investment. And you see Ganesha Fund. That's we've earmarked 300 million of startup investment. And that's how we looked at the APAC growth. And while we have partnered with traditional banks so far, in India, we are sort of jumping ahead to fintech capital equity investment. And I have a privilege to partner with some of the most prominent startup CEOs like DV here. Lastly, we also have the same type of fund in Indonesia, Garuda Fund, of course. And so you are visually seeing the representation of our MUFG's whole APAC strategy here. So thank you for having us.
Wow, what a brilliant take, and very well summarized and very well created. Very beautiful slide, by the way, with all the details shown very well. Thank you, Ken. So now let's go to Indonesia. And by the way, I'm really loving the representation with the beautiful shirt here. Really great, great way. So now, San, if you can start with Indonesia and share the overview there, yeah.
Thank you, Hiro. And good morning, everyone. First of all, thank you for having me here today. You may feel the think I'm a bit dressing down, as unlike the typical Japanese businessman, I'm not wearing the suit. But please don't get me wrong. Actually, this long sleeve batik is a very much the formal business attire in Indonesia. Maybe this is my first tip for you today, in case you have you're planning to trip to Indonesia anytime soon. My name is Naoki Mizoguchi. I'm working for MUFG for the almost 30 years, including the last 5 years in Bank Danamon, Indonesia. So my current role is transform Bank Danamon from the local traditional bank to a more unique hybrid bank with global and also digital capabilities by collaborating with MUFG, Krungsri, venture capital, startups, including the ride-hailing, e-commerce, P2P lending, the payment gateway, etc., etc. So today, I'm happy to share my observation from the local bank perspective. And a little bit my observation of the Indonesian market, whether to collaborate or compete between the banks and fintech. My short answer is the collaboration in most cases. By nature, the banks are, the conservative, or I should say, the prudent, because we are heavily regulated and the need to focus on the safety and soundness of our operations. On the other hand, fintechs are more innovative or agile, but yet to be fully accepted. So by combining these, the bank may be able to transform our business, the traditional business, while the startups or fintechs, they may also scale up your market penetration. Yeah. My point is rather than the competing with each other. Let me give you just one example: the unsecured personal loan (UPL) through P2P lending. So Danamon has ample liquidity and risk appetite for financial inclusion, but lack of the proven digital underwriting capability yet. On the other hand, or by contrast, the fintech, some P2P lending have established the very etching, the credit scoring model, but do not have a stable funding. But by collaborating, we are, the better serving for the unbanked segment. So my suggestion is, the brief observation is mostly in Indonesian market, we are collaborating. But having said that, I do see some increasing competition around the border of the bankable and bankable segment. For example, SME, the P2P lending is now expanding the ticket size from the micro and SME to commercial size by establishing the digital bank or super lending entity. So my observation is mostly collaboration, but increasing the competition in some specific area. So I stop here, and thank you. Back to Hiro.
Okay. So as Abe-san shared about MUFG and then the strategy in the region, now San moved to country specific to Indonesia part. Let's come to Sam, also from a bank side as well as the corporate VC side. Clearly in Southeast Asia, beyond Indonesia, you have Thailand, Vietnam, Philippines, different market, and what you guys are doing there, and how do you see opportunities and things in that market?
Thank you very much. So thank you for having me here in India. So my first time in India and Mumbai. So glad to meet you guys or the fintech startup. I think today is very good events and it is showing that how the Indian fintech startup could be entering into the Southeast Asia. Let's talk about that later. So basically, I have been with the Krungsri for over than 18 years, less than you. But MUFG is our we call our mother bank. So we owned by MUFG. Yesterday was already 10 years MUFG and Krungsri partnership together. So we have been working with MUFG as well for 10 years and have been running the Krungsri Finnovate for 7 years already. So we are the corporate venture capitals to invest startup starting initially in Thailand, and now we expanding to Vietnam, Philippines, and Indonesia. The reason is that why we expanding because of our Krungsri has a subsidiary with the consumer finance in these countries already, home credit in Philippines, and partly now we'll be in Indonesia, Security Bank in Philippines, and Saigon Hanoi consumer finance in Vietnam. Then we also have Laos and Cambodia. That's why we need to seek and collaborate with startup to enable our business in these countries. So not whether you have to be a startup in that country, particular country, but if you are startup outside this area, this ASEAN, but you have going to have a business into the country, into Thailand, then we are into Southeast Asia, we are welcoming either collaborating and investing. So far we, Krungsri Finnovate have been investing for 22 startups. In our portfolio, we do have about 2 unicorns already. One from Singapore, which is Grab. We co-invested with MUFG. They were already a unicorn. One of them is a e-logistic. And the other 6 are preparing for IPO. So this is fruitful in Thailand on the startup size and as well as in the ASEAN size. So on our strategic that we would like to be collaborating with startup. So our main job is to make a business matching file what you need and matching with our business unit, try to make it together. So how can we enable and synergy together? So this is, for example, we work with every type from seed startup until the mega startup. So recently we brought from MUFG Direct Connection, we bought Stripe from UK to be as our been sponsoring bank in Thailand already. So this is an example.
Wow, what a great introduction. By the way, all the fintech founders building here, if you want to expand to Southeast Asia, you can clearly hear the message very loud. They are open for collaboration, so please do reach out. And with that, we come to our last panelist and share a little, ask DV about sharing a little bit about his company and then how they expanded into the Southeast Asia, and then we will take it from there.
Thank you, Hiro. I'm representing Lentra. Lentra was born 4 years ago, and we are an assets platform provider. All the technology solutions that are required by a bank to lend is what our platform provides. So with a broad spectrum of solutions that we have on the asset side, we focus mainly on retail, unsecured, and retail secured. Plus, we have added the south end of or the bottom end of the totem pole of business banking, which is MSME and SME lending, with the average ticket size not exceeding $300,000. So, I mean, give or take, it could go up to $500,000 in some cases, but the averages are on the northern end of the business banking is about $350,000 US. So that's the spread with which we operate. These tend to be high-frequency loans, and we assist the bank in getting started in no time. That's the unique proposition we have. From a concept to implementation and go live is typically 90 days for a large bank. If it's a small, agile bank, it could be as low as 30 days. Our product implementation is called Super 60. So it's 60-day implementation. So with that, we had near instant success in India. We started off in India and focused only on Mumbai first. We then expanded to Chennai, Kochi, Delhi, and Hyderabad. India is a tough market. So we hit about $20 million, or 160 crores worth of turnover to March of this year, when we decided that we should be looking at other markets outside India. India is such a tough market that once you have some degree of success growing up in this environment, I can tell you with my experience that Southeast Asia is easier. People are more friendly. The banks are more approachable. You will get an audience there, and the payouts are much better than the effort. For the same effort, you get paid at least 3 times more in the other markets. So we picked, in the early stage, we picked only 3 markets to test the capability that we bring to the table, and we sorted the countries by population in the ASEAN bloc. The top 3 are Indonesia, Philippines, and Vietnam. Vietnam being the smallest at about 100 million population. 120 million is Philippines, and 275 million is Indonesia. Per capita measures are about 3x of India, and that lends itself beautifully for the population that's addressable for retail, both unsecured and secured loans. So we've started off well. It took us 6 months to get our first order. We started about February of 2023, and we are clocking a reasonably good rate, and we should catch up with India in about 1 year's time, turnover-wise. So that's been the...
Wow, brilliant. No, really great. By the way, Indians are also friendlier. I'm just saying, you know. So let's start with DV again. If you can just share maybe 1 or 2, or if there are more, just the way of doing business, similarities or maybe differences between India versus Southeast Asian market. And it can be either, it can be on multiple dimensions, I guess. It can be either on customer side, it can be on the partnership or bank side, or it can be on the regulatory side. Whatever things that you think that stood out to you when you were looking to expand, and how they looked either similar or different, India versus Southeast Asia, it will be just great to learn for many of the founders here.
India and Southeast Asia, market-wise, Southeast Asia is a big blob. There are actual countries. I mean, Indonesia is different from Philippines, which is different from Vietnam. But one thing that helps the similarity is if you have an introduction going in, it helps. They will research just as much as the Indian buyer does. They will go through an evaluation table or an evaluation matrix, which is just as complicated or detailed as the Indian buyer. So the similarities with banks are that banks by nature are risk averse. I'll borrow the word from Nao-san. He said they're very conservative. They're really risk averse, and it takes time for you to get through to the correct person. But once you do, the Southeast Asian experience that we've had with the breadth of products and solutions that we bring to the table, you will have the initial win will be reasonably easy, and it's sustainable. So that's been the experience so far. And we also picked these 3 countries because they're predominantly English-speaking, and the the interface, in most cases for us, has been an Indian on the other side. So an expat Indian sits on the other side of the IT buying for the bank. So it's relatively easy to converse in a local language. So if you find a Maharashtrian, you can switch to Marathi and speak to him. Or if he's a Punjabi, you can switch to Punjabi and speak to him. So the familiar interface is a fantastic asset that we have exported out of India. So that's the big advantage Indians have going out to these countries.
Oh, no, this is great, really, really brilliant. Coming back to, let's say, it came on previous panel too, should you do partnership, should you do it yourself? I'm just curious, if I had to go to, let's say, Indonesia now, San, how do you think about a bank partnership model versus do it yourself, and which one works better, which one has advantage, disadvantage? If there are examples from experience that you would like to share, anything, any insight on that will be really great.
Thank you, Hiro. Before going they get there, they just give you a brief background or overview of the financial market in Indonesia. As you know, make long story short, I think huge opportunity there, but not as tough as India, but also very much crowded. Following India, Indonesia is another, the huge and fast-growing, market with more than 270 million population, with the average age of just, below 30. And only 50% of the people have banking account, and 5% for credit card. But more than 80% of the people use a smartphone, meaning there is huge opportunity for financial inclusion in the area of the lending, payment, and so on and so forth by using digital. However, as expected, the market is very much well attended. Roughly speaking, 100 commercial banks, there are 100 commercial banks, 1,400 rural banks, 200 NBFCs, non-banks, and 500 fintechs, including 100 P2P lending, 300 payment-related players, and so on and so forth. So the question is, how to win the market, right? How to win the market. And based on my, the 5-year experience in Indonesia, the key success factor for bank and also the fintech is to, collaborate rather than, competing each other. So how to choose the right partner is a key. And with complementary capability, and even more importantly, good chemistry. I do believe chemistry is important because collaboration between bank and a fintech should be a long journey rather than just a short-term, one-time the transaction. Just give you an example of the Danamon's collaboration with Grab. Since MUFG made an investment in Grab back in 2020, Danamon and Grab have been collaborating to deliver the financial services across the Grab's ecosystem, namely drivers, merchant, and users. We actually tested various the project initiative and are scaling up some of the several services, including digital payment for merchant, digital lending, unsecured lending to drivers, and also co-branding credit card for users. It may sound like a easy and quick win or quick success, but actually not at all. By nature, we are the different animals. So need to go through the overcome issues, many issues, conflict of the interest, lack of resource, different, prioritization, and so on and so forth. Need to be on the same page. So without good chemistry between the two, I mean the Danamon and Grab, we wouldn't be able to, to get there. So my suggestion is if you enter the Indonesian market, I think selecting and collaborating with the right local partner is a key for success. Your partner can be bank, fintech, NBFC, or conglomerate, or whoever, but your partner should have a deep understanding of the business, market, culture, regulation, and etc. So that's my, the suggestion. Thank you. Back to Hiro.
No, I think really great and amazing example of this partnership with Grab, especially at scale. So going to the next topic, I'm just curious, opportunities for Indian startup in Southeast Asia. And yes, you have built out your business on a very unique use case, but if there are other things you want to highlight, and I would love here every panelist to come and share with you what they see are the gaps that can be addressed. Yep. We go this time this way. So start from here, end there. Yeah?
So the opportunities are very similar to India. So if you have experience of having done business in India, it's very, very similar. It just appears when you first go into the Indonesian or the Filipino or the Vietnamese markets that they are about 10 years behind us. It just feels that way because we are pampered in India with everything being accessible so easily through an API. The government data that has been opened up, GST data, the account aggregator that just came in, the credit scores, the credit bureaus are way advanced in India as opposed to the Southeast Asian markets. The data that is available in India is easily scorable, and you can have custom application scores, and the unsecured lending can be automated to the extent where it's like a self-driven car. You don't need a driver at all. But those things don't kick in Southeast Asia. However, alternate data is available. Telco data is available for use to an extent which is very, very surprising, and it's so inexpensive that it's an extraordinary surrogate to establish IDNV. So the initial KYC that we solve in India through Aadhaar, we look to an alternate data source to have some kind of a Boolean operator between what's available as an ID and the alternate data that's so easily available digitally, and correlate the two and then say, this guy is exactly who he claims to be. So that was a big awakening for us, and we have integrated ourselves into data providers. And like Nao-san was saying, data providers are in every street corner. It feels like the dukandar in India, that you have so many shops all over the place. There are data providers all over the place in Indonesia and Philippines. Vietnam is more conservative, but it's an emerging market. So that's been the experience so far.
Okay, so I think from my experience, so there is an opportunity and challenge in every segment in ASEAN. The opportunity in ASEAN is that the population is not large like India, but I think at least almost in half in India. I mean, completing all the countries together, I think approximately about 700 to 100 million people. So it will be growing up maybe to nearly billion very soon. But the challenging is that we thought that it would be easy for the startup in one country to go up in scaling to outside that country, but different country, different culture, different language, different religious So everything is different in these 10 countries, none the same. Even the border together, Thailand and Laos, Thailand and Myanmar or Cambodia, we are very different. And the regulation is different in many countries in this way. So there are opportunity and challenge. So only the startup that can be surviving and understanding clearly or have a good partnership. That's why I mean that if you would like to go in each country in Southeast Asia, you need a strong partnership, a local, especially the local one who can help you entering into the market. That will be very key challenge in this region. But it's nice. People are very high mobile banking penetration and quite understanding on the technologies. So like Thailand, almost 100% of mobile banking penetration, smartphone mobile banking as well. So that's why we are very early adopter to the new technologies, all the ASEAN people. That's one thing. And the second thing, if you think about the house of fintech, which types of fintech can be entering easily into ASEAN. So basically, I would divide into 4 types of fintech. The first one is payment. So basically, payment in each country has different types. So in Thailand, we do have the same as UPI, prompt pay, for a few years already. So everything is free of payment. So fintech come with the e-wallet in Thailand will be very hard. But in Indonesia, maybe it's different because it's not on this one yet. In Singapore, it's already adopted on this one. So mainly on the fintech in this region, we'll be making on the payment gateway on the online payment. Second one is a cross-border remittance. It's very hard in these regions on this one, except Philippines. For those Filipinos, there are a lot of fintechs doing the cross-border remittance because Philippines are the one, I think the number one in the world, the number of penetration in the population working outside Philippines. The Filipinos, I think 15% of Filipinos working outside Philippines. So there's a lot of fintechs doing a cross-border remittance. But in Thailand, we would like to do a cross-border remittance for the migrant workers. But the hardest thing that we cannot do the KYC of these people. So it's still hard on this one. Number 3 is on the lending part. So the lending part in this region, what DV said yet, is it 10 years behind India? Because we still have lack of alternative credit scoring, alternative data. Only in Indonesia, what we've seen that they are pretty much high on the peer-to-peer lending, over than 100 licensed fintechs over there. Whereas in Thailand, very few and very hard to scale on this one with the regulation and with the alternative scoring. So different, very different. And the last one, this is very powerful, especially from in Thailand, which is what we call the robo wealth, which is robo advisory wealth management platform. So Thai people crazy in keep investing into even with the bank or even with the fintech. So basically, it helps ASEAN people. So we are doing a lot of due diligence in each country on this wealth management platform, and we see that it is quite booming on this one. So overall, I think mostly the fintech startup in ASEAN, perhaps some of them enablers, some of them would like to competing with the banks. But however, with these 3 days, I stay in Mumbai and Indian founder, in most of the Indian fintech are quite mostly enabled to the bank, which is very important because we would like to be working closely for those and collaborating. As you mentioned that we often have a 3 model: build, buy, or invest. And if you ask our IT people, they love to build. But if you put in the queue, prioritization, you may wait for 2 years. And then the product will be obsolete already. Then we would like to, definitely, my part is encouraging them to buy. And if we can buy, we would like to invest in your company. So I think 7 years of my experience to running this one is we try to change the mindset of the IT people, of the business unit head, that you're not going to build by yourself. Why not? You use the product. You have an API connected like 60 days that you mentioned, not have to wait for 2 years. And then if we're good, we can be a part of MUFG family. We can invest it in you.
Brilliant. Just for everybody, let me summarize. If you haven't been paying attention, remember for Indian startup, eKYC, payments, cross-border transfer, wealth management, and lending. So far, identified some key areas. I'm just curious if Nao-san and Abe-san would like to add something. If there are areas that you want to highlight that can be built out, please chime in.
Okay, thank you. I already covered some of the opportunity and challenge in the previous answer, but just a little bit more colors. So similar to Thai, the other country, Indonesia also has the opportunity not only for financial the inclusion, but also for wealth management, cross-border, the payment, etc., etc. And challenge also I want to choose highlight two challenges in Indonesia. One, regulatory process. Depending on your business model, you need to obtain the regulatory approval from either regulator or central bank, and it often the case that takes a time longer than expected. That's another reason why you need to have a good experienced local partner to accelerate the process. The another challenge is again competition. I mentioned that there are 100 the commercial banks, 1,400 rural bank, etc., etc. So in total more than the 2,000 the market participant or financial institution. But the fact is that the big four banks are very much dominant. The more than 40 or 50% of the lending and funding share are dominated by the top four banks, including 3 SOE banks. So for the medium size the banks, including Danamon, and also the Fintech, is how to gain the market share from the four players is another challenge. Then the partnership does matter. Again, yeah, that's all. Back to Hiro.
Abe-san?
Yeah. So just on the partnerships, we talked a lot about it, and you've heard a lot from the two banks, local banks. Naturally, the meet the small retail operations might sound a better fit for fledgling startup fintech companies. But let me give you another example, which is, again, my day job is overseeing the largest corporate banking. We across APAC, our portfolio is about 80 billion, right? We bank with most of the country's largest corporates. So there were instances where we directly connected a manufacturer with one of our partner fintech corporation, and they're now literally trying to veer into one of the Southeast Asia markets. Again, with MUFG's approach in thinking, and you have a whole different aspects, levels of the group in front of you. And so we look to do everything we can to help our partners, and especially the fintech investee startup partners to get into whichever area or business segments that you need to speak to, and we can hopefully provide you a seat on the table to get you started speaking with those partners.
Okay. So in the interest of time, I will combine last two questions and I'll ask Abe-san to again address those. One is how can MUFG support the Indian startup to expand in Southeast Asia? If there are examples or anything around either opening up the customer base or enabling partnership with the local partners or anything like that will be great. Any highlight around that, or anything that can be shared around how Lentra expanded and so on. So that's first one. And then second, after that, just high level commitment to both India, Southeast Asia and the region, and your support for the ecosystem. We will conclude with that, yeah?
Thank you very much. So for the first one, I kind of touched on it, earlier, and once it becomes public, we can speak to it more about it. So with remaining minutes, let me jump to the final question. And there's a anecdote. I spent 6 years in West Coast. That was another our partner bank called Union Bank of California, which we just sold for $8 billion last year. So with that capital, what MUFG is looking to do, obviously, if you look at the news, we have been making some of the new investments, more so in the other places, which is Asia, APAC, in India. As one of the largest Asian bank, our natural thought process is to really support and empower the growth of whole APAC, Asian economies. And so again, through large corp lending, mid to small banking, and with the helping and learning really from the future of finance, we're really trying to be part and very deeply committed, neck deep, into the growth and potential of APAC, and of course, as well as especially in India as well. So thank you very much.
So just for all of the founders, for all of the builders who not only want to power opportunities in India, but are looking for regional expansion, global expansion, I just want to highlight, you have a clear message that there is a great partner here who can open up the doors for you as you want to expand. So please, please utilize that opportunity. And with that, if it's okay, one question. If there is any questions, I would love to conclude from audience. If anybody want to ask any questions, your name and the questions and what do you do. With that, we can conclude. Yeah, all right.
Hi, this is Ryosei Hanada from Nikkei, a Japanese newspaper agency. And I have a question about the Japanese company's expansion in India. We do understand there are so many digital innovations happening in India and Southeast Asia, but according to the Japanese government, as of last year, the numbers of the Japanese company's office in India is around 5,000. And at the same time, Japanese company's office in China is more than 31,000. And is that only the matter of the distance? And regarding the recent some political situation, do you believe that in the midterm, do you believe that India overtake these kind of position when we compare to the China situation?
Okay, thank you. So as a Japanese bank, I certainly shouldn't drop our relationship and our eagerness to introduce Japanese corporate relationships with any of the economies and companies here. And I also cannot speak for our Japanese corporate clients, but in terms of geopolitical situation, of course, G20 is ongoing in this country as we speak. I think we are as committed to providing the right source of balance to the global economy. So not going to the political aspect of it, but as the largest Japanese institution, we are sometimes closely involved in sort of G2G policy discussions. We hear about Quad investment. Actually, I recently had a visitor looking to strengthen the supply chain of one of the those crucial product, streamlining supply chain so that the Quad and free and open APAC economies can provide for the essential part of equipment for the growing economy. As such, again, as a private institution, we are not saying one way or the other, but of course, we are closely tied with our government's discussion and where each of the policies are going. And at the same time, I think we started in India back in 19th century, and we are one of the oldest institutions with a long-term view in each of these regions that we're involved with. So I think we pride ourselves in not seeing everything in the short term, getting in and out, but building a long-term steady relationship with each of our countries and companies. Thank you.
What a brilliant way to end the panel. A big applause for the panelists, yeah? Thank you very much. Thank you.